Hey, Puppy Trades! I want to do a video analysis update of the pot sector. Yeah, that's right. We're going to talk about some extremely risky, extremely volatile, money-losing growth stocks that have been extremely beaten down. Right? So why am I going to talk about them, and why on earth am I considering buying long-dated leap options on some of these stocks? We'll get into that. But why am I looking at these stocks in the first place? Well, finance and FinTwit is kind of a very weird world because on the one hand, it's extremely, kind of buttoned up and regulated and, very professional. And on the other hand, we have people, who study Wyckoff, which is the idea that there's this shadowy cabal of MMs that, manipulate, stock prices to their advantage, and that we can actually see their actions in the charts, right? That's kind of a, woo-woo thing to say, but that take is over 100 years old, right? And that's a very respected person. I mean, W.D. Gann, what W.D. Gann was doing to, figure out what the MMs thought, that stuff was all types of loopy, right? And even Warren Buffett, he was focused on dividend investing and dividend income, and a lot of that he did from collecting option premiums. And a big reason that he focused on that was he compared the stock market and the speculating on prices to having a farm, and then a crazy man every morning woke up and yelled at you some random number for the price offering for your farm, right? And so if you focused on, instead of what income and what, was coming from the farm, so to speak, what was coming from, all the livestock and all the crops, right? If you stop focusing on that and you started focusing on what the crazy man was yelling at you for the price of your farm, right, you weren't going to be a very good farmer, right? Well, that's, why he focused on dividend investing and income. And that's why I focused on, income a lot. But the other side of finance is called speculative finance. And that's actually thinking, wait a minute, what's that crazy person going to say? What's that crazy person going to offer tomorrow, right? What's that crazy person going to offer tomorrow? And that crazy person has a name in FinTwit. We call them the MMs, right? So let's look at the MMs because they get very lucky, sometimes. And I know that sounds conspiratorial, but let's just look at this. MFSOX, right? So I was looking at one of my favorite option screeners, one August 15th day, right? A beautiful day. And I looked, and I was at my favorite option screener, one of them, which is IV rank and percentile. Then clicking on ETFs and then sorting by lowest IV rank and percentile. And I saw this leveraged pot ETF, right? I thought it was a little interesting because it had 0% IV rank, which means options were the cheapest they'd been in the past 52 weeks, right? Implied volatility was 75%. That was the lowest it had been in the past 52 weeks. So that means that at that time, that was the most optimal time for MMs to take positions like straddles, strangles, and buying married puts, which are called long gamma positions, right? And those positions mostly benefit from a few things, but, implied volatility being very low, right? Options being very cheap. And then as it spreads, a move occurs, hopefully, preferably, towards one direction. Is how it would benefit. And this can especially be used to accumulate stocks, which is something that I'll probably get into the future. But anyway, that's why I look at this ETF. And so the best case scenario for the MMs happened for this ETF, where it looks like they got to buy, their long gamma positions when implied volatility was at its 52-week low. And then look what happens. It immediately starts to explode. And if we look at the price, we now know in the future that what happened is there was a lot of news coming out that led to a substantial price move, right? So just looking at this chart, it's just kind of uncanny. Right around here, this day, is when options on this ETF are at its 52-week low. I add it to my screener list. Hey, we got the quad witching quarter coming up. And then what happens? Boom. Implied volatility explodes, and we have this big move to the upside that no doubt they could have made a crap ton of money on. And that would have, in the case of married puts, in the case of straddles and strangles, that would have been a directionless trade, right? Anyway, so now possibly, right, we can take this a little further, right? Maybe this is all, nonsense, right? This could all be nonsense. That's perfectly, an option, right? But what I think's happening is that they kind of took their, and we need other charts to support this, but I think they took their initial, not like that was the first time they bought it, but they bought these long game positions here. And I think what they did is they caught wave one in Elliott wave. And this is an A, B, C correction where the length of wave A places the wave B high is where wave C was met between the 61.8 to 78.6% retracement. This is where wave two can end. So what could be happening is this is wave one, this is wave two over 3.56. This juiced pot ETF is going to enter wave three towards 8.11. Now, another thing that I saw was that today the MMs were buying the long straddle on TLRY. So what's kind of this idea here, is that they buy these long gamma positions and now they catch this big leg up, and now they're getting ready for the next leg up by locking in these moves. So when they buy these long gamma positions and when they buy these straddles and strangles, there's a few things that can happen. But the big thing that they want to happen is a big move happens, right? So let's say today that MMs bought a lot of straddles on TLRY, or maybe they bought a lot of married puts on TLRY. So a married put would be that when TLRY is at $2, they buy the two strike put. Let's say they buy it for a far expiration date, and the delta is negative 36 for the two strike put when TLRY is at $2. And so to offset that, they buy 36 shares of TLRY. That would be called a married put. So that's another form of a long gamma position. And it's actually possible that they'll profit from that position alone without doing anything, just because TLRY has a big move to the upside or to the downside. Now, I don't really like to play these to the downside when we're this close to zero, because to play it to the downside requires a reverse split. Those aren't always fun to hold through. Anyway, the MMs are loading up TLRY for a big move, right? It looks like they got lucky loading MSOX up for a big move. And I've already told what I think this is going to happen. What I think is going to happen to this one over 3.56. TLRY, I think what they're going to do, very similar, is that this is 1, 2, 3, 4, 5 waves up. When you look at this RSI, TLRY has one of the better impulses, I think, from this low. 1, 2, 3, 4. Wave 3 makes the highest reading on the daily RSI. There's a shallow wave 4. Wave 5 makes a higher high that ends with momentum divergence. This looks like an ABC correction, and now it also is between the 61.8 to 78.6% retracement. Now, 1.91 is way too tight of a stop for TLRY. That's kind of the preferable 78.6% retracement. This wave 2 low, while it's a little arbitrary, 1.62 makes a little more sense from a risk-reward perspective. So that's just Elliott wave analysis. Absolutely none of this is investment advice. These stocks are extremely risky. Looking at, TLRY right now, I mean, another one, right? Book value of 0.42. But this company loses money, right? Annual income is negative. They lost $1.4 billion last year. And even though implied volatility looks like, it's, not necessarily cheap, implied volatility is 90%. The beta is 2.43, right? Objectively saying this is about 250 times more volatile than SPY. Isn't that interesting? Another You know, this when a stock is priced at a book value of 0.42, it's essentially being priced for no growth, and this is a growth sector. That's just something, I think about. It's another reason, I want to talk more about the crazy man yelling the random price in this video, and not my fundamental beliefs on, the pot sector. But I will get with canopy growth, talk about how this could be a bigger, cycle playing out. But just within the cycle from this low, over 1.62, I think this is wave one. Wave two at the 61.8 to 78.6% retracement. I'm looking for TLRY to enter wave three. The length of wave one placed at the wave two low could take TLRY up to 3.82. Let's look at ACB. This is one I'm personally considering buying an at the money leap on. Now this, that's just really, that's gambling technically, but that's to get a lot of exposure to the sector for a long time. I'm looking to buy a 2026 at the money call on ACB and canopy growth. That's extremely risky, but I think what it's going to do is it's going to give me a lot of exposure to the sector for the next 2 or 3 years with a very little amount of money, and I could potentially make a lot of money if I'm correct. So if I'm correct, what could happen is that, and even for ACB, I'm not going to use a stop loss, but I do think this is interesting. Even, this low is an interesting invalidation. Now, with ACB, I think TLRY has the prettiest count, and just for the, wave purists, this impulse happens so fast, it's kind of hard to get in here and subdivide this into 5 waves. TLRY and Sundial and Innovative Properties, I would say they have, prettier impulses, but ACB, MSOX, MJ, even Canopy Growth, they kind of just big line up, right? So this big line up could be wave 1 or wave A. This could be an ABC correction past the 78.6% retracement over 0.4588. That's wave 1 and wave 2. A wave 3 to 1.15 can occur. TLRY is the stock I've already talked about. Canopy Growth is the other one I haven't, but this is the one that gives an interesting longer term view of the stock. Now, this has broken its IPO low, but in the big picture, what could be going on, and this is kind of the appeal of the pot sector potentially, and why I'm glad the leaps have long dated expirations. If I buy them in the future, which I'm planning on doing possibly in the next few weeks if this sector stays down. This 1, 2, 3, 4, 5 waves up, it has broken the IPO low. Some would say that's invalidated it for this sector, and when it's a relatively recent IPO, which this some would argue is not. Anyway, some would say that's an invalidation. I would say I've seen a lot of growth IPOs get broken, and that's a very common way for that white coffee and selling climax to happen. Anyway, that's part of the speculativeness of this, but what I think could be happening from this high is that this is a large wave 1, and this is an A, B, C wave 2 correction. The length of wave A placed at the wave B high has been met for wave C. And so this is kind of a long-term area where, the ABC equal legs, principle is very useful in Elliott Wave. And looking around at some of these, other stocks in the shorter term, maybe there's another one that also talks about it in the long term. We can get to that. But looking at some of these stocks in the shorter term, it does make me look out at these longer term cycles of the pot stocks. Of course, for a leap options position that I'm considering, that wouldn't be, necessary. Even just, a bear market rally could be quite profitable in this instance. But looking at Sundial Growers, there's a few ways to look at this, but I think it's got one of the nicer impulses from this low, like TLRY. So I wanted to get into it. So from this low, I think this is 1, 2, 3, 4, 5 waves up. So I'm going to go ahead and subdivide this right now. And so what could be happening, there's a few ways to count it. That's why I'm doing it live. But I think this is 1, 2, yes, 3. And this is even the highest high on the RSI. Shallow wave 4. Wave 5 makes a higher high in price, but a lower high on the RSI. It's kind of a pretty impulse. And there's two pretty nice invalidations with Sundial, which is another thing I like about it. And so these kind of impulses forming, the MM's getting lucky on MSOX. It does make me kind of want to take a shot downfield. And with the power of options, I can spend a very little amount of money and possibly get some big exposure. So it is gambling, but I do think it's a pretty calculated risk. 20, 30, $35 a contract for 2.5 years of at the money exposure. And this is, I didn't want to make too many correlations, but this is kind of a theme with and this is a controversial contrarian opinion. But this is kind of a theme with small caps, and it's kind of a theme also even with, not that this is, IIPR, this next stock actually is correlated with real estate. But the idea, yes, no one knows the future, but what if interest rates took a break from 5.25, Fed funds rate to 3.25, 3% Fed funds rate towards 2025, 2026. Maybe we see growth, after this big beatdown, get a little bit of, relief. Anyway, that's just something that, getting, the holistic analysis, I also think is supported by the long-term charts of real estate, but also, small caps. And there really is no reason to, correlate pot with real estate besides AFC Gamma and IIPR, which I'll go through next. But anyway, for Sundial, I think this is a large wave 1 and a wave 2. I think this is another wave 1 and an ABC wave 2 correction. This ABC correction, looks pretty clean. The length of wave A places the wave B high. We're between the 100% extension, and then it hit the 127.2% extension. So 1.35 is a great, level. This is kind of what some, wave theorists is the preferred way of finding a stop, is using these ABC corrections, which can also be, yes, counter trend to the upside too, but using these ABC corrections to get, a defined kind of hot zone, in this case, a buy zone, an ABC correction between the 100% and 161% extension is where wave C is supposed to end. So they usually put the stop at the 161.8% extension, which is 1.35. But another possible invalidation, which is quite tight, would be that this is a wave 1 and a wave 2, and this is another wave 1 and another wave 2. That invalidation is a little tight, but it would be 1.48 to see Sundial enter wave 3 of wave 3, which could be, when the pot stocks get going, and we'll see. But anyway, that's the upside. And the downside. The upside, risk reward is just kind of silly to say out loud, beyond what some of these wave 3 of wave 3 targets can be. I will say for Sundial, if things did go crazy, the length of wave 1, place at the wave 2 low. The first target would be 2.4 for wave 3, possibly a shallow wave 4 correction that retest the wave 1 high. And a wave 5 higher. If wave 5 is the length of wave 1, place at the wave 4 low, there's a chance Sundial could go all the way up towards, $3, $3.2. And that could be, just to end this 1, 2, 3, 4, 5 wave sequence. That would end this black wave 3 for the degree people out there, which, focusing on the degrees of Elliott wave is most important. Anyway, which one have I not done? I think it's IIPR, the one that's connected with real estate. Yes, it's not a crazy, connection to make. These companies, there's really two that I know of that are pot real estate stocks, but we can look at the fundamentals in a sec. The Elliott wave, I think this is a large 1, 2, 3, 4, 5 waves up. The length of wave 1 placed at the wave 2 low would take wave 3 beyond an all-time high of 288. Now that's pretty far away. The invalidation to say that wave 2 has already ended is 63.36, which is not bad risk reward. Within this closer cycle, though, I do have, a bad count or a count that didn't go right. They don't all go right. I wanted to keep it up. But within the cycle from this low, what could be happening is that we have a pretty impulse for IIPR. And so what I think is going on is that this is 1, 2, 3, 4, 5 waves up. It's a pretty clean count. I can't tell broker. It's a pretty clean count. But just looking at it, wave 1, wave 2, wave 3 is where the RSI makes the highest high in price. There's a shallow wave 4 and a wave 5 that ends with momentum divergence on the RSI. So this is wave 1. I think this is wave 2. I'm going to measure these fibs. But I think the length of wave 1 placed at the wave 2 low is going to be the wave 3 target. And that could open up the longer term count. I think in both instances, this low of 63.36 is going to be the most useful in validation. But maybe for a shorter term, count, the tighter level is good to know, 89.90 and 63.36. So 69 is going to be the wave 2 kind of tighter stop for this shorter term idea. I think the length of wave 1 placed at the wave 2 low ultimately is going to be reached. That's going to give a wave 3 target for IIPR, of about 97.77 before a shallow wave 4 and a wave 5 higher. So I think I see what the crazy man is doing. I think I kind of see his hands, and I don't think he's going to fold them. I think he's going to hold them, and I ain't going to walk away.